Hey, what's going on, guys? Hope you're having a good day. As always, my name is Michael. Thanks for joining me. So I've been meaning to get this video out for a while, probably a few months now. And so sorry it's taking me so long, but I definitely wanted to get this done before I go on vacation. And that is review a company called Prosper. Okay, some of you guys may have heard this before, some of you may not. But Prosper is an online loan company where it's peer-to-peer lending, which is totally different than going to apply for a bank. You know, when you go to a bank and you ask for a loan, well, they're underwriters. You know, they'll look at your income and the dollar amount requested and your credit history and all that, and then they decide. Well, Prosper and peer-to-peer lending in general is a little bit different. You actually go to their website and you actually say, okay, I'm interested in, you know, a car loan or a personal loan or something of that nature, and say, I need $10,000. They're going to check your credit score, and then what's going to happen is other people, right, are going to fund your loan. So you'll see here in a bit kind of how it operates, almost like Kickstarter would, but for a loan instead of, you know, a project goal. But what I really want to dig into is how it works, what the benefits and the disadvantages are, and then lastly, should you use it? So to start off with, if you were to even go just to prosper.com and you look at what they offer, at the very, very bottom where it says, not the very bottom, but in the middle it says how it works, they've got 3 steps. They've got check your rate, name your term, and I think the last one was just get funds deposited into your account. That all seems very simple, and you know, it could happen in 30 minutes. It's not really that way at all. They're definitely skipping a few steps over here, and this is kind of what I want to walk you through, what the process is like. So the very first thing they do is have you find out what your interest rate is going to be on their loan. They say check your rate, and this is the information that they ask you to fill out. I've kind of taken a picture directly off their website. Now, one thing that I think is at least interesting and cool about this approach is that if they say, okay, well, due to everything that you've given us, this is going to be your interest rate, you can flat out say, you know what, no, never mind, I'm going to walk away. And I think that's a cool feature because it means that you know what you're getting into before you even put in an application. And they say at the bottom, you know, checking your rate is not going to affect your credit score. Okay, but anyways, that is step number 1. After that happens, you know, you're going to name the term length that you want, and I believe they have to have it anywhere from 3 years to 5 years. They've also got a loan requirement of $2,000 to $35,000. But as far as the next step goes, you're going to name your term. What happens next is kind of where the whole thing comes together, and that is when the peer-to-peer side of things takes over, and people are going to honestly kind of bid on your loan. So what I want to do is actually take you to the actual website and show you what I see as of today. So, you know, if you look at prosper.com, you see the borrow option, you also see the invest option, right? And I probably will talk a little bit about this, but not a whole lot. But you know, if we go to invest and you scroll down to the middle, you have an option to browse the loans. And I want to look at these loans so you can see exactly how it works. So I'm going to click on that, and this will take me to this page, just an overview of all the loans people are trying to get right now, and you can see kind of how it works. So here you can see your credit tier on the left, right? It goes all the way from AA, A, B, C, D. I believe there's an E, and then there's an HR, which stands for high risk, right? So you've got all the credit tiers here. Then you see the dollar amount that they want. Then you see the interest rates that they're willing to pay. Then you see what percentage is funded. You get to see all this information, and you can see, you know, how you essentially bid on a loan. Like if I ask for a $10,000 home improvement loan, it's going to say, okay, this is my credit score, this is the dollar amount, the interest rate, and it'll show me what percentage of people have decided to fund my loan, right? These are investors. That's why it's under the invest option, because other people are fulfilling your loan. They're cutting the bank side out of it. Now, another thing that I want to mention here real quick, or at least point out, is that somewhere on their website they had this little graphic that said loans for your life, and they showed like 6 different type of loans. But if you actually look at all the loans that people are asking for here, it looks like it's almost nothing but home improvement loans and debt consolidation loans. Like that's 80% of it right there. So that kind of just goes to show you what most people use this website for. Now, I do want to say, maybe there's a chance that actually once you set up an investor account and you want to start investing in some of these loans, maybe you're given access to auto loans and other things like that I can't see, but I haven't seen anything that says that. So I'm assuming that these are all the loans that are needing to be funded right now, and you can tell that most of these, again, they're home improvement loans and they're personal loans, okay? So I thought that was pretty interesting. So now that you can kind of see the whole picture of how it works, when you apply for a loan and people fund it and then the money's deposited into your account, that part's really easy to understand now. What I want to share with you are kind of the main disadvantages or things that I don't like, and I'll cut to the chase and just say I don't really recommend most people use Prosper loans, and it's really for a few reasons. Reason number one, their interest rates. I mean, on their very home page, like almost the first thing you see at the top there is low interest rates. And I'm sure some of you guys saw this already whenever I showed you the basic page, but I don't know if I would agree with low interest rates. I don't know if I would ever use that to describe these loans. So what I want to do is filter through these loans and actually show you what the lowest interest rate that they offer out of everything right now. And if you see that this A tier credit score loan, it's still paying 8.1%. Now 8.1 isn't so high or insanely high that it's like offensive, but it's definitely not low either. But what you should pay attention to and remember is that that is the best interest rate that they're offering. Okay, if I go to the opposite direction and I say, well, let's start looking at some of the interest rates on the high rate loans, guys, these get up to 31%. That is insane. No one ever should take out a 31% loan. That's ridiculous. I don't care what type of loan you get, do not pay 31%. Don't pay half of that. Okay? So to say that, Prosper, we cut out the bank and we can offer lower rates, that's not necessarily true. 31% is ridiculous. If you actually do the math on those loans that were requested, that $7,500 loan at that 8.1%, if you do the math, they're actually going to pay $11,700, okay, in total payments. Their interest portion of that is another $4,200. That's not cheap. If you look at that $20,000 31% loan, okay, that loan was for 5 years. If you do the math on that entire loan, it's an extra $14,000 in interest, meaning they're not just paying, a little bit more than the $20,000, they're paying $34,000 total. So again, I'm sorry to sound like a broken record player, but these are not low rates. Next, let's look at that little there's no hidden fee. Now this one, admittedly, is not a huge deal, but I just think it's funny when companies say there's nothing hidden at all, right? On the very home page, you're not going to see anything about a service fee, right? I challenge you to look and you're not going to find it. Well, if you actually look right here and you click on it, it's going to show you that, oh, there they are. This is how they make money. Their 1% lending fee. And it's not that it was hard to find this, but to say that it's not hidden would be a little bit of a lie. Now, the reason why I say this isn't a huge deal is because I'm sure when you put in the request for a loan and you find out what your rate's going to be, this 1% fee will be built into that rate. So you already know of it ahead of time. So at the end of the day, not a huge deal, but again, I appreciate transparency, and this one just kind of frustrated me a bit. Lastly, it may seem like cutting the bank out is this huge convenient thing to do, right? It's going to be so easy once you can cut the bank out because that's the most difficult part and everything. And while that may be true, in some cases, it's still stressful and inconvenient in some of these loan requests. If you actually look at how long it may take to get a decision on some of this stuff, well, I shouldn't say decision, it's whether or not your loan is funded by these investors. Look at the time remaining on some of these, right? Some of them are just under 14 days. Now, I may be jumping to conclusion, but that leads me to believe that it may take up to 2 weeks to find out if your request is going to go through or not. There's some banks that'll have an answer for you the very same day or even right when you apply. To wait possibly 2 weeks to find out if this is going to go through would be ridiculously frustrating. Not only that, it's not really consistent as well. You can find some high-risk loans that are 50% funded in the first day, whereas you could find a C or a D tier loan request that it's 18% funded and they've only got 2 days left. Can you imagine putting in a request and having it just be denied, or no one wants any part of it, yet someone with worse credit is pretty much funded in 2 or 3 days, right? That inconsistency would be inconvenient. So to assume that totally cutting out a bank is going to solve all the problems is definitely not the case. So all in all, those are my thoughts on Prosper. I know it's not the most in-depth, in-detail review ever, but once you've done hundreds of loans like I have, because I've worked at a financial institution, you pretty much get the gist. So I really do, even though I don't promote Prosper a whole lot and I don't recommend people go through Prosper for their loans, I do think peer-to-peer lending is a very, very interesting approach to doing loans, because it does take away power from the banks and give more power to the people. Unfortunately, these rates just aren't doing anyone a favor, and I don't recommend you do business with them. The only thing that I will say is that if you are an investor, clearly you could see that there was some potential for very, very high dividend yields. If they're charging 31% on one of the loans, there's a good shot that you'll be making a pretty good return, assuming it's paid in full. However, I'll never invest in this company simply because I'm in the business of trying to help people get out of debt, not get into debt. So those are my thoughts. Obviously, if you agree with me or disagree with me, I'd love to hear your thoughts below. Thank you so much for watching, guys. Take care. I'll see you next time.
Hey guys, thanks again for watching this video. I hope you learned something new from it and you were able to strengthen your financial position. I'm going to keep coming out with more videos, so please stay tuned, but go ahead and like, subscribe, comment, and have a good day.